What if I told you that the same thing that builds empires can also tear them down? Money, something we all rely on, has the power to create immense wealth but also to destroy entire civilizations. Money is more than just a tool for buying and selling. It's a force that has shaped history, created vast fortunes, and plunged entire economies into chaos. From ancient times to modern-day financial systems, money's rise and fall has affected every corner of human existence. In this video, we'll dive into the fascinating journey of money, how it rises to create wealth and prosperity, but can just as easily fall, plunging economies into financial ruin. What causes these cycles of growth and collapse? More importantly, how can we learn from history to protect ourselves and secure a more stable financial future? 1. The definition and role of money. Before diving into the rise and fall of money, let's define what money truly represents. At its core, money is a tool, a medium that facilitates trade, assigns value to goods, and supports economies. But money goes beyond mere transactions. It's a symbol of trust and power in society. Without that shared trust, currencies would lose their value. Imagine this. Centuries ago, people traded livestock for grain, wool for spices. But as societies grew, this system had its limitations. This gave rise to precious metals like gold and silver, universal symbols of value. These coins were widely accepted, enabling economies to thrive. By 2023, gold reserves globally were estimated at 35,500 metric tons, still highlighting its ongoing importance as a store of value. However, as societies advanced, paper currency replaced metal coins, marking a significant shift. For example, in the 13th century, China introduced paper money, symbolizing a promise of value rather than the value itself. Eventually, this led to the digital currencies and financial markets we see today, with cryptocurrencies now valued at over $1 trillion globally as of 2024. The evolution of money, from gold coins to digital currencies, shows that while its form changes, its influence continues to grow. But with that power comes vulnerability. As history teaches us, the very system that fuels economic prosperity can also lead to instability if mismanaged, setting the stage for both great wealth and devastating collapse. 2. The rise of money, wealth creation through the ages. Let's take a look at the rise of money through history, where wealth creation shaped civilizations. In ancient times, money in the form of gold and silver coins allowed for trade to flourish. The Roman Empire, for example, established one of the first systems of taxation and commerce, leading to the prosperity of the empire. The introduction of paper money in China during the Tang Dynasty was a revolutionary move that allowed economies to grow rapidly, enabling empires to fund trade routes like the Silk Road. The 20th century saw the expansion of financial markets. Stock exchanges, such as the New York Stock Exchange, which was founded in 1792, became the foundation for modern economies. By the mid-20th century, stock markets were creating opportunities for individuals to invest and participate in wealth building. In 1970, global stock market capitalization was valued at just $2.5 trillion, but by 2020, that number had surged to $95 trillion. The world's wealthiest investors, like Warren Buffett and John D. Rockefeller, used their insights into these markets to build generational wealth through strategic investments in companies, industries, and even entire sectors that would shape the global economy. Fast forward to today, where financial markets still dominate wealth creation. In 2024, the stock market's total global value hit over $120 trillion, with the largest corporations like Apple valued at more than $3.5 trillion. These figures illustrate how money has transformed from ancient trade systems to modern financial powerhouses. Despite these innovations, the lessons of history remain critical. Money can rise quickly, but it can also fall just as fast if mismanaged. The story of wealth creation continues to evolve, shaping our present and future. 3. The fall when money fails. Money, while a creator of wealth, has also been the force behind many economic collapses. Hyperinflation, reckless financial practices, and poor management have toppled entire civilizations. Take the Roman Empire. Its downfall was partly due to currency devaluation. By reducing the silver content in their coins, The Romans triggered massive inflation, which destabilized their economy, contributing to their collapse. Similarly, the Weimar Republic experienced extreme hyperinflation in the 1920s. The German mark became so devalued that people had to use wheelbarrows full of cash to purchase basic items like bread. In this environment, money lost its value entirely, eroding the economy and leading to chaos. More recently, the 2008 global financial crisis serves as a powerful reminder of how money's power can swiftly turn from a tool for growth into a force of destruction. Reckless lending and speculative investments in the U.S. housing market created a bubble that burst, erasing trillions of dollars in global wealth. Lehman Brothers, one of the world's largest financial institutions, collapsed under the weight of the crisis, leaving millions in financial ruin. It's chilling how quickly money can turn from a creator of wealth into a destroyer of lives. The fall of money often happens when people forget its volatile nature. Mismanagement, greed, and overconfidence are the catalysts that turn financial stability into collapse. The lesson here? Money, while powerful, must be handled with care, both on a national and personal level. Failing to do so can bring even the mightiest empires to their knees. 4. The boom-bust cycle. Understanding economic highs and lows. The boom-bust cycle is a repeated pattern in economies where periods of rapid growth are followed by severe downturns. During the boom, optimism fuels aggressive investments, often leading to inflated market values. Everyone rushes to get in, pushing the economy higher, but this overconfidence leads to risky decisions and unsustainable growth. One of the earliest examples is Dutch tulip mania in the 1600s, where tulip prices soared before crashing, bankrupting many investors. The South Sea bubble of 1720 followed a similar pattern, with stock prices surging due to speculation, only to collapse and cause financial ruin. The Japanese asset price bubble of the 1980s led to a decade-long stagnation known as the Lost Decade. Real estate and stock prices soared, but when the bubble burst, Japan suffered prolonged economic stagnation. In more modern times, the dot-com bubble of the late 1990s showed how speculative investments in tech stocks led to inflated valuations. When the bubble burst, billions in wealth were wiped out. The key takeaway from these historic booms and busts is clear. Overconfidence, speculation, and unsustainable growth inevitably lead to a downturn. Smart investors avoid chasing quick gains and instead focus on long-term strategies like diversification, which can help navigate the highs and lows. History has shown that even the most euphoric booms are followed by corrections, and those who remain disciplined during periods of economic growth can better weather the inevitable busts. 5. The psychology of money. Money isn't just numbers in a bank account. It taps into deep emotional responses that often cloud judgment. Behavioral economics highlights how irrational many of us can be when dealing with finances, driven primarily by fear and greed. When markets are booming, greed makes people chase after wealth, often leading to reckless investments. It's that overwhelming feeling of everyone's getting rich and I don't want to miss out. But when the bubble bursts, fear grips investors. The same people who were chasing riches suddenly panic, selling off their assets at a loss to avoid further damage. This fear-based reaction is a common cause of financial ruin, as emotion takes over logic. Events like the dot-com bubble or the 2008 financial crisis saw this on a massive scale, where countless portfolios were devastated by panic-driven decisions. Financial leaders like Warren Buffett and Charlie Munger have mastered the psychological game of money. Known for their long-term investment strategies, they focus on value, patience, and rationality. They avoid emotional decision-making, instead taking calculated risks based on careful research and strategy. As Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." Controlling emotions and avoiding herd mentality is crucial for long-term success in investing. 6. Can we break the cycle? Here's the big question. Can we escape this endless cycle of economic booms and busts? While preventing downturns entirely is impossible, we can certainly minimize their impact. By focusing on financial education, learning from historical patterns, and practicing diversified investing, we can build a solid foundation that withstands the inevitable storms. It's about thinking long-term rather than chasing short-term gains. Think about it. Financial leaders like Warren Buffett have consistently preached the importance of patience and smart investing. Buffett famously said, "The stock market is designed to transfer money from the active to the patient." When we recognize that money is a tool and not the end goal, we avoid the traps of emotional decision-making that fuel boom-bust cycles. Instead of getting swept up in market mania, wise investors prepare for the downturns and position themselves for recovery. The key to breaking the cycle lies in viewing money as a means to build wealth sustainably, rather than focusing on immediate profits. Economic cycles are inevitable, but by managing your finances wisely, investing for the long haul, and understanding the patterns of financial markets, you can protect yourself from the worst and even seize opportunities during challenging times. In the end, it's about financial resilience, staying calm when others panic and being prepared for the ride ahead. 7. The rise and fall of money in our lives. Money's rise and fall is inevitable. It has shaped history and will continue to shape our future. Empires have risen on economic strength, only to crumble under the weight of greed, mismanagement, or external factors like wars or financial crises. But while we can't control these global forces, we can take charge of our personal finances by making informed decisions, managing debt, and building wealth with long-term strategies in mind. In our personal lives, financial freedom is within reach, but it requires discipline and understanding. Navigating the ups and downs of money means preparing for downturns by investing wisely, diversifying, and avoiding emotional decision-making when markets fluctuate. It's about recognizing that wealth isn't just about accumulation. It's about managing money wisely during both prosperous times and periods of decline. The lesson is clear. In a world where money rises and falls, financial stability is built on knowledge, discipline, and preparedness. By mastering your finances and understanding how money truly works, you can thrive even in uncertain economic times. Financial freedom isn't about predicting the next market crash. It's about being ready for whatever comes next. Money has the power to build empires and fortunes, but it can just as easily cause everything to collapse. Its rise is fueled by trust, innovation, and economic growth, while its fall is often driven by greed, mismanagement, and poor decisions. Understanding the cycles of money, the booms and busts, the psychology behind it, and its long-term impact allows us not only to survive, but to thrive in a volatile financial world. As you move forward in your financial journey, remember this: money is simply a tool. It can create immense wealth, but only if used wisely. Financial freedom is attainable if we learn from the past, avoid the traps of greed, and recognize that money is a means to an end, not the end itself. By embracing the lessons of history and adopting smart money management, we can rise above the challenges that have brought down so many. In a world where money constantly rises and falls, only those who are prepared will navigate its tide successfully. If you found this video helpful, make sure to hit the like button, subscribe for more wealth-building content, and drop a comment below telling me what step you're going to take next toward financial freedom. Remember, the journey starts with a single decision. So, what's yours? Thanks for watching, and I'll see you in the next video.